if we look across investing and we look at asset classes, you can see the government and the mainstream media would have you think the consumer inflation rate is 2%, that lower. I'm speaking in the US and the US dollar, of course. Obviously, inflation rate is much higher in Argentina. But the most important point of this is we're talking about all 8 billion people in the world, and we're talking about all the money in the world, even under the best of circumstances. This is what they're looking at. So the 2% line is the consumer inflation rate. Most of these investments and asset classes can beat the 2% inflation rate, but as you can see, they can't beat the real inflation rate, the asset inflation rate, or the money inflation rate, the rate at which money loses value against scarce desirable assets. Now, as you can see from the chart, the worst investment is a commodity. You don't want to buy oil or natural gas or lumber, because human beings are really good at producing lumber and oil and natural gas. I mean, we use machines, we use factories, we use technology. Is there anybody that doubts that we're better at making oil or gold or silver or platinum today than we were 2,000 years ago? It's kind of obvious. We just get better. And so, commodities and cash don't work. Then if you look at the average investor, they're getting 2.9% return because they're diversified. As I've said before, diversification is selling the winner to buy the loser. Your consumer home is doing a little bit better. Bonds are a little bit better. And the diversified portfolio underperforms inflation. If you look at the S&P index, it's about the same, right? You're getting 7.5% return against about a 7 to 8% inflation rate. But all you're doing is just keeping up with asset inflation. You're not beating it. The only asset classes that beat it by a little bit, REITs, real estate investment trust, it's basically real estate portfolios. And maybe you might beat it by a percentage, but there really aren't any winners here. What this tells you is that if you own the most desirable property in the middle of London or Paris or New York City, you might be able to slightly beat monetary inflation, and most investment ideas don't work. And so if you want to preserve your wealth, an investor has to convert their currency into assets. And, currency, CNY, euros, dollars, ARS, bolivars, real, etc. You have to convert them into assets that are scarce, desirable, portable, durable, and maintainable. Those are the 5 criteria that matter. And you have to evaluate every asset against that. So what is Bitcoin? Bitcoin is the most powerful digital monetary network in the world. But it is simultaneously 4 things. Bitcoin is an asset, it is a network, it is a protocol, and it is an ideology. And many people misunderstand it. They think, it's just a cryptocurrency. But I think when you start thinking about asset, network, protocol, and ideology, your eyes open. Many people say, well, Bitcoin's not backed by anything. What's it backed for? It has no intrinsic value. And they grossly misunderstand the network. Bitcoin is secured by 4 types of power: computing power, electrical power, economic power, and political power. And if you don't understand these 4 types of power, then someone's going to trick you out of your Bitcoin, or you're going to make mistakes. So for example, the computing power is 460 exahash. That's all of these millions of Bitcoin miners, custom silicon, and they are channeling 16.5 gigawatts of electrical power into 460 exahash. Now, 16.5 gigawatts is 20 basis points of the power in the world, so it's a small fraction. But 460 exahash is what makes Bitcoin truly secure, because that's all the computer power in the world. If you wanted to redirect all the computers at Google and Amazon and Microsoft and all of the iPhones to do hashing of Bitcoin, they're probably not going to generate 460 exahash. So it's the custom silicon which converts electrical power into computer power, and they're both important. Arguably, it's a lot easier to come up with 16 gigawatts than 460 exahash because all the hash power is owned by the Bitcoin companies that are securing the network. Now, to put this in perspective, 16.5 gigawatts is more power than the energy used to propel the entire United States Navy. All of the aircraft carriers, all the destroyers, all the ballistic subs, the entire Navy runs on a bit less than 16.5 gigawatts. So that's a lot of power. 460 exahash is all the computer power anybody else can muster. But that's not the only thing. Bitcoin's secured by economic power. And if you look at the 4-year simple moving average of Bitcoin, and then you look at the supply, you conclude about $560 billion have been invested in, the M is wrong, it's $560 billion have been invested in this network. And so that money secures the network. And you got to expect that the people that invested the $560 billion are going to protect it using all of their resources and influence.
Bitcoin serves as a decentralized digital currency operating on a peer-to-peer network. Its value is determined by market demand and supply dynamics, akin to traditional commodities like gold. The scarcity of Bitcoin contributes to its perceived store of value. Functioning as a network, Bitcoin employs blockchain technology. This ensures transparency and security. The decentralized nature of the network prevents a single point of failure, enhancing resilience against censorship or hacking attempts. As a protocol, Bitcoin defines the rules and standards for communication within its network. The consensus algorithm, proof of work, validates transactions through computational effort, ensuring security and integrity. The protocol governs the issuance of new Bitcoins through mining, contributing to the network's overall security. Beyond its technical aspects, Bitcoin embodies an ideology rooted in decentralization, financial sovereignty, and resistance to censorship. It emerged as a response to centralized financial systems, offering individuals control over their wealth and financial transactions. This ideology attracts those seeking an alternative to traditional banking systems and government-controlled currencies, promoting a vision of a more inclusive and accessible financial system.
And then finally, you've got about 220 million holders. 220 million people have some ownership of Bitcoin. And those 220 million people, they're also going to use their political influence to protect the network. So when you're investing in Bitcoin, you're protected by 4 types of power. Now, how does this compare to everything else you can buy on that chart? Well, you could think of Bitcoin as the apex commodity. The top competitor would be gold, worth $10 trillion. And if Bitcoin's digital gold, it's better than gold. And it's better than gold because it's got an absolute supply cap. The production is rapidly approaching zero. After 2035, there effectively isn't any material new production of Bitcoin for the next 100 years. And that means we're totally capped. And so people compare Bitcoin to gold, but Bitcoin is gold without the liabilities and the risks of gold. It's kind of pharmaceutical grade gold. Gold is going to have systemic inflation. Miners are going to make more gold. It's hard to audit. It's very difficult to transfer. It's expensive to custody. It's very expensive to authenticate. Those are all the liabilities of gold. We know about that. The reason we know it doesn't work is because gold has not been appreciating in value for quite a while now. Now, Bitcoin solves that problem, but it enhances gold with digital audit, digital transfer, digital custody, decentralized robustness, integrity. It's got a global utility and appeal, and the technology industry is enhancing the value of Bitcoin. One day you will see every smartphone in the world will have support for Bitcoin built into it. And even right now, you can download dozens of apps that handle Bitcoin. And so
Bitcoin and gold share intriguing similarities, positioning them as alternative stores of value. Like gold, Bitcoin is scarce. There will only ever be 21 million Bitcoins. This scarcity mirrors gold's physical limitation and contributes to the perception of both assets as hedges against inflation. Examining historical data, both Bitcoin and gold have demonstrated resilience amid economic uncertainties. For instance, during the 2008 financial crisis, gold prices surged, and Bitcoin, born shortly after, weathered subsequent economic downturns, gaining recognition as digital gold. The portability of both assets is noteworthy. While gold requires physical storage, Bitcoin's digital nature allows for easy transfer across borders. This characteristic makes Bitcoin more accessible, especially in our increasingly interconnected global economy. However, differences arise in terms of divisibility. Bitcoin is highly divisible, enabling microtransactions. In contrast, gold is physically indivisible, limiting its use in day-to-day transactions. The decentralized nature of Bitcoin contrasts with the centralized mining and distribution of gold. Bitcoin's transparency, secured by blockchain technology, distinguishes it from the opacity of gold mining operations.